All right, welcome back everyone. Hope you all had a fantastic weekend. So a bit of an update to the last video. You can see that 4-hour divergence that we did sell on. I was actually the Pico top around 97k before dumping, and now I've lost a very key level. And that key level is going to basically decide whether we are going to continue the uptrend or whether we are going to sink back into the range and hunt lower prices. And I think it's the latter, but we'll go into why that is in a sec. But if you followed the last video, I just sold my Bitcoin. Here's where I'm buying back. I have not yet bought back. So I did give that instruction that we were to sell there. That was good. The video before that, Bitcoin breakout now. Here's where I'm selling. All these titles so far, the last 4 or 5 videos, we pretty much timed everything all the way back to Bitcoin's 80-day downtrend broken. Don't miss this. So, there was a lot of people saying the breakout was fake, but here on the channel we were pretty adamant that based on the suppressive downtrend that was happening, finally breaking from that after a few months was worth watching. So, that's all panned out so well so far, but now I'm kind of flipping bias on that, and I'm going to cover why that is in a sec. Now, if you do remember from the last video, I was partially de-risking. I wasn't taking the full stack off of the H4 divergence, basically because it was a daily time frame. We're looking for higher prices on the daily, so we're not going to cut the full stack on the H4. Once we start to lose the H4 trend, you can see this update I gave in the Miles High Club here. Basically chose to TP the rest on the H4 Noodle loss, which we could see was basically this here. We're basically trending along it, and then we just lost that, shot below this level, so that was enough to take profit on the rest of the trade. But we can jump in the charts now and have a look what we need to see with this. So basically, the reason I am completely out of the trade now is based on the weekly. So when you're doing top-down analysis, you always give higher validity to the higher timeframes. So if we just get rid of, I wouldn't get rid of anything. What's important here? Let's just scroll right in. You'll see this jam of levels over here. Let's make them make a bit more sense. We have a weekly support resistance and the 2025 yearly open. So those two levels there, we have been discussing that 2025 yearly open at around 94k for a long time. That had to be the line that's had to flip. You could have just had that one line on the chart, and that was pretty much all you had to look for a flip for higher time frame continuation. But basically I was saying to the group yesterday in the Miles High Club, on the weekly close, I was like, this doesn't look good. We should probably be out of this. Now, if we just get rid of the indicators for a sec, why was that? So we had a weekly FVG, which we tagged into. As we did that, we swept and formed an SFP of the previous week's high. That's also a bearish sign. At the same time, we closed under the 2025 yearly open and also this weekly SR level. Now you might be asking what the weekly SR level is. It's simply just over here where we had a big period of support before breaking down, coming back up, reclaiming it. Nice retest before shooting up. It's just been a pretty valid line in the sand. You can also see the back and forth with it for support and resistance retest. We can actually just get rid of that. 2025 yearly open will do the job for now. We can even just put it up there because who really cares about a few bucks. So this was the problem. We couldn't close above it. We swept it. We closed below. At the same time, we were also retesting the weekly trend from the underside. Now the weekly trend had held as a bullish uptrend for 1,000 days, over 1,000 days, and then we closed below it. We wicked into it. This was the first bearish retest, and look at the reaction down. So I said to the group, this is probably a place we want to not be taking longs, but I was kind of conflicted on that. So I'm going to give you sort of the A-B scenario for this. Now, admittedly, right now it is starting to sell off quite heavily, so it looks even less attractive. But basically, what I was saying to the group, I don't do videos on Mondays, so I might have to start doing that. But this was over the weekend. But basically what happened when we sold below it, you can also class this as a range high deviation. So if we just were to draw this out, this is basically what I've been drawing as the range high. So nice green box here. This is basically the range high to me. Price came up and could not close above it multiple times. Now, what happened? We got above it. This looked good. We wanted to see daily trend catch up. But what happened? We closed back below it. So once we got this candle close here, this basically confirmed that as a deviation. So we're now back inside the 2-month range that we just broke out of. This is not a good sign from a price action perspective. Now, what is potentially a good sign is, yes, we flipped the daily trend, but without the confluence of key levels, it means not much. So, daily trend since early October, every retest has been bearish on the way down, bearish here, bearish all the way down here, but this is where we took our original long because of the compression. It was making higher lows instead of lower lows. compressing the band, then it got that breakout, came back, very nice retest here, shot up, and we're looking for this retest to hold again. This is basically the last line in the sand for bulls right now. If they don't get that, then I'm definitely targeting this cluster of stacked lows down here around 86K. We take out that as the first priority. Now, if we start to accept under this, start to close under this region down here, then I'll be looking for, potentially trade all the way back down to the 80K, down to the range low. So we'll have to see how that goes. These, all the way down here at 80.5. And there's also the previous year's value area high for VWAP there. But basically what I'm looking for right now. So we have, the weekly looks quite bearish. The daily is looking bearish now, but it is still holding the trend. We won't really know till tomorrow's close whether it closes below the trend or not. So what we're going to employ here is a strategy known as the right side of V. This is basically just what I trade as like a momentum trader. So let's pretend this level here is 100K for Bitcoin. Now, here's Bitcoin in a downtrend, and here it is right at 100K. Let's just test old Paradise's drawing skills here. Looks like it says look, but that's a 100. All right, stick with me now. So a value investor will see this and be like, right, 100K is a fair price, psychological round number. I'm going to buy here. What happens next? Bit of a bounce, price goes below. Keeps downtrending, then it forms a bottom, then it comes back up, maybe finds this resistance a few times, can't get above, then it has a breakout, maybe comes back, gives a retest, and then it starts the uptrend. That confirms this is a deviation, sure, that's what we're looking for, but you can do two things here. Now, this is where the value investor is buying, on the left side of V, you see, V reversal out. This is where the momentum trader is buying, on the right side of V. Both these people are buying at 100K, they're buying at exactly the same price. But the momentum trader is buying in line with momentum. They're waiting till the trend is established. They're helping on board. They're not having sleepless nights. The value investor here is now underwater. They're wondering how low can it go? They're wondering, did I just buy the top? Like picture XPL. Everyone thought it was going to bounce to $1 and it went right down to like 30 cents or whatever, even lower than that. So the problem is, yes, it may recover. But maybe Bitcoin would have gone down from here all the way down to 60K before recovering. And then you need to catch multiple high percentages to get back to even break even. So this is what I'm looking for exactly with this right now. And this is a very powerful concept. This is the basis of my trading. I'm never really a dip buyer. I'm more a let the dip happen, then catch the momentum when it shows itself person. So let me check the times. I'm doing the old Paradise waffle as usual. All right, so what I'm looking for here, two things. I'm looking for it to bottom out here and to reclaim the yearly open there at 93.5. I'm not going to take a buy down here at the daily trend because I need the confidence of reclaiming this level now. I've lost it because this has been confirmed now as a deviation of the range high. We're now back in the range. So if we get the reclaim of this around 93.5, I'll be a buyer there. My stop will be somewhere down here and I'll be looking for that swing up to 100K like we've discussed before. Let's just get rid of some of this stuff here. All right, now, if we don't, I'm looking for a short. Up here, we can't claim that level, looking for a short back down. Now, by the time the 4-hour trend catches up, it's actually there right now, potentially that's what I want to catch. I want to catch a 4-hour trend retest at that level. I actually missed the 1-hour trend last night. I was looking for this, I was talking to the group about it, but I was quite bummed to have missed it. So, see, remember at the start of the video when I moved the yearly open and said, who cares about a few bucks? We do right now in this example. Because as this morning, it was around this level, give or take. And this basically happened at 3 a.m. We came up, we tagged the hourly Noodle at the same time as the yearly open, and we have just dumped from there. So that would have been a brilliant short opportunity. I have missed that now, give or take. Being 3 in the morning, see, it sort of sucks being in Australia. You miss the US session every time, unless you're a night owl. But, we do have the 4-hour coming down now. So if the 4-hour comes down here, we get some sort of bounce. We are on the daily trend, might get the daily trend bounce. We come up here, we reject, maybe we sweep some highs. I'll be looking for that short down to at least, this pocket in here looks quite good as a first TP, around 89.5. But I think this is the bread and butter one down here, around 86. So that's where I'll be looking for a short down. And we start going lower than that, then we're just playing the range rotation, going the highs to the lows and vice versa. Because all ranges are, you have the range, you do get the deviations, you look for the rotations the other side. That's how we keep it as simple as possible with range trading. And that's a very simple range trading strategy. All right, so important to also discuss USDT dominance. I have been discussing this a lot and it's not looking so great for us now. So what we were looking for, remember, we were looking for the daily trend to be lost after being held for months. That happened. This is where we took our long on that rejection. We got under this key SR level, this key support resistance level. And we did bounce at the 100 EMA, but I don't really use EMA so much in this, more just the trend indicator that was being respected. That aside, we got back above this level, and now we are challenging the daily again. So once again, this is the do or die level. Just like on BTC with the daily trend for USDT dominance is at a very critical juncture point. If we start to accept this and we start to treat the daily trend on USDT dominance as support and start trending up, we are going for those 86K lows, we're going for those 80K lows, depending on how much it trends up. So very important thing to watch. You can even just set up a split screen here and have two of those things next to each other, BTC and the USDT dominance chart, but they're basically just mirroring each other anyway. You're just, looking at the inverse of one versus the other. So what I want to see happen here, I would love to see this reject. We want to see this come back down, lose this again. That's when we get that pump in the market up to 100K. But if we don't get that, if it starts to accept this as support and trend up, then we're looking for that short on BTC down to 86K. Very quickly, I'm just going to cover Ethereum, because I don't want to keep this too long. Ethereum's also at a critical point right now, and I think this could also make for a very good short coming up soon. Once again, we rejected the range highs, we rejected this 100 and 200 EMA cluster. And where are we now? We're back at the daily trend, also this daily diagonal. So if we lose these two things, we should see a bounce here, if the market is bullish, I should say. If the market is bearish, we're not going to see a bounce, we're going to see these two things lost. Now, if we're losing a key diagonal at the same time as losing trend, that also opens up a short to take out all these shitty lows down here. Pardon my French, these poor lows down here. Just demonetize the channel with that. Happy days. Not that I'm monetized anyway. Not popular enough yet. But, if we lose these two things, hunky-dory, we can look for a short. If we start to bounce here, then I'm not buying anything until we reclaim this level, until we reclaim the EMA cluster over here. So want to buy quite a bit higher up for a move, roughly 3,300 up to, let's say 3,800, give or take. So until that happens, I actually think this probably looks for a better short because of all these stacked lows here. This is all liquidity. People have their stops all under these. A nice big washout in one go would take all of them out, and then we can make our plans after that. So anyway, I'm going to leave it there. Please like and subscribe to the channel. I forgot to mention that at the beginning of the video. Just hop straight in. Also, if you want access to any of these daily outlooks I'm doing, the daily trades, and also these indicators I'm using, and the link to the Mars High Club, which is our Discord, is in the description below. Other than that, I'll catch you in a couple of days, and I'll leave it there. Cheers.